Australian dollar to US dollar, right? So just looking at this. So what I was looking at today on the daily time frame, and it's something that well, I like to look at as well, is just a simple moving average cross on a high enough time frame. So I was looking here on the daily, and the specific cross that I look at sometimes is the 20 and the 50 EMA crossing. And if they cross up, so 20 above 50, that usually means more bullishness, and then if they cross down, that typically means more bearishness. Let's go. So I need the 20 EMA and the 50 EMA. I'll make this one black. I'm going to make that my 50. And this is basically, I'll explain to you the play, but it starts here with this. So these crosses on the daily time frame, they don't happen all that very often. And in the sideways markets, it doesn't always perfectly work out, but bigger moves are usually first accompanied with, you first get that cross. So you get the 20 below the 50 on the daily, sells off. Later down the line, they cross back up and goes way higher. Now, after all that time, yesterday we've crossed these EMAs back to the downside. So I just take a look at whatever ticker is going to give me a good opportunity at a play. And this is something that I'm watching here particularly. So we have a bearish fair value gap on the daily time frame. All these concepts that we've gone over in our charting masterclass, they very much also apply on whatever market that you're looking, as long as you're working with candlesticks. So my idea is that this is actually bearish. So on the daily time frame, I'm looking for a swing trade on this lower down. So either I'm going to look for a little bit of a move back up and then to find a lower high and to smash it down. Or another idea is simply that you wait for 0.65250 to basically fall out and fail as support. At that point, I would imagine that this probably has some ways down lower to go. And more specifically, I'm looking to trade this back down to this fair value gap here on the daily. So I have a target slightly below 64 cents. Now in Forex, things work also with percentages, but we measure moves in terms of pips. So it's basically, you see, if I draw out the percentage here is approximately 2%, this number is the pip amount that would correlate to. So I am looking for this to break below 65250. We've wicked from that yesterday, but that 2050 EMA dead cross on the daily time frame and then running back in this fair value gap and not being able to run back up, that's bearish. So it's basically the same thing as on any other chart, right? I would have an alert here, 65248. And if you get below that, I think there's a clean short to take, but it's already bearish. So I'm actually already short positioned, but I would like to compound in that play and to really see when this level of support falls out, then to essentially add to the position. So I'm already short with a stop loss on the high from 1 to 3 days ago here. So basically the middle of that fair value gap, if it touches that again, I'll get stopped out. But I think there's a bigger chance that we won't make it there again and that we're going to come down. So this is something that I'm looking at. And it also ties in with the DXY. And that is also something that you've mentioned on your blog, right? The dollar index. So that's also an important chart to be aware of when you're trading Forex, because the strength of the dollar is going to basically, it's going to have a huge impact on any Forex pair where you have a currency that trades against the dollar. So DXY up would be very bullish for the dollar, and that would be bearish for anything that trades against it. So that's maybe the chart that we can look at next. But for anyone who is interested in playing this, you can, you can send me a DM if you wonder where to trade this, for example. I have a simple account on FX Pro. I have nothing with them, but that works decently. And then you basically get a way broader variety of things that you can trade. And I kind of like the variety and not just being stuck on equities all the time. So that's basically what I have for this. I'm bearish on this particular pair, and I hope that makes sense.
No, I love that.
As to my reasoning why, it's a couple of
good
things
to know.
together,
Really
right?
quick, Jay, it's good to know that you are bearish, and we are posting a blog about this in a little bit, because I know not everyone maybe might be comfortable trading Forex yet, but it's still, even for stock traders, like there are a lot of ways to take this analysis, him being bearish on the Australian US dollar, and realize that there are shipping companies out there that rely on exports either to or from Australia from the United States, using either the Australian dollar, using the US dollar. And so it's good to maybe use that kind of analysis from a forex, from a forex pair like the Australian US dollar, and be able to find what those shipping companies are. You can go on. Honestly, I just use Bard, but there's so many different ways you can find that. I know a few of them that popped up immediately was BHP Group. There's also FMG, which is Fortescue Metal Groups, and then TWE, Treasury Wine Estates. Everyone wants to just look those up, and that's just this is one way to use this analysis that Jay gives about forex. Whether it's the Australian dollar, the euro, which we did on a different blog, and kind of use it to your advantage on the stock world as well.
Yeah, and you might not think that this is also relevant, but forex, right, especially if your home currency is not the dollar, then it's very, very relevant to someone who lives in Australia. This is highly relevant because if this chart comes down, it essentially means that their home currency is being outperformed by the dollar. And then there's a way around that, right? You could, for example, go on a crypto exchange and hold USDT instead. And then that basically hedges you out of your own situation. So I know for most of you guys, you're just aware of only the dollar, and that's your universe. But a lot of people in the world do not work with that particular currency. I myself, right, work with the euro. So it basically broadens your scope and your perspective on the whole financial market a little bit, and you start to understand like a bit more what is important around the world. But apart from that, right, it's just about the setup that presents itself. So really, just to go over you, so that everybody gets something out of this, right? So if you're on a daily time frame, what do we have here? So simple EMAs, a 20 and a 50. So the way that you can look at EMAs is basically your 20 EMA is the performance over your last 20 candlesticks, and then the 50 EMA is the performance over the past 50 candlesticks. So whenever the 20 is above the 50, it means that your shorter term performance is better than the medium term performance, which essentially means that that looks bullish in the short to midterm. But when they cross again, this can cross, and then in a couple of weeks we can trade higher. So we always apply a stop loss, but the probability shift in our favor here that it's actually bearish and that the short-term performance is going to be worse and that we're going to come down. So that is the first thing, looking at that EMA cross, and then also seeing what price is doing here, being aware of a fair value gap, bearish fair value gap, and then seeing that price constantly on all these days, 1, 2, 3, 4, 5, 6, 7. We spent a week trying to get in this fair value gap to do what? To get rejected, and then essentially also on these EMAs. So that essentially, like when you get back above these EMAs, you can think about covering your short, but as long as they're above you, that basically helps you as a guidance back down. And then again, if you want to be the safest possible, you would wait for this level to fail to hold, so then you get below it. That is going to look really bearish, and then we're probably going to come back to fill this fair value gap. So this would be really my first target that I'm aiming for, and that's basically from 0.65, a little bit above that, to a little bit below 0.64. And that doesn't seem like a lot, but that is a big move on a currency pair, with the idea that if it runs lower, and I'm actually bullish on the dollar way more than I'm bullish on any other, just from a fundamental perspective, currency, right? So I'm trying to position myself short on foreign currencies, and this one is a good candidate for this double confirmation, actually. So you have your bearish fair value gap and your EMAs. Again, there's no guarantees, but that is a decent setup in my book. Something that you could look at for your own charting. For example, if you come to a chart and you don't know exactly what to look at, that's something that you could scan for.